Hello guys, welcome back. Today's Thursday, it's another webinar day as usual, so 5 to 6 p.m. I will be live and I will be chatting about the market and what's going on about the geopolitical on the macro side and how can we utilize that fundamentals to get the best trade ideas possible. So don't forget to go into the description of the video, click on the Telegram link and join me there, because that's where we'll be sending the link for you to join me 5 to 6 p.m. Australia time. As well, please subscribe to the channel and give us a thumbs up, because today we'll be talking about a topic that has been a little surprise in the last couple of weeks, the stagflation. What is this stagflation and how stagflation actually works? And are we on a stagflation spiral or are we only on a deflationary phase? Well, a lot of people get confused about stagflation and deflationary effects. The biggest thing about stagflation is when we have a GDP, the gross domestic product, not going anywhere, so staying the same for quarters and quarters and over, and the inflation keeps going slowly down, but when you go to the supermarket you have the same prices. When you go to buy a house on the mortgage, you have the same prices. So nothing will change. The inflation will be stagnated and the GDP and the growth of the country will be exactly the same as the central bank maintains the rates higher for longer, or maybe cut 1 or 2 times, but not sufficient to actually come down the prices. So I don't know if you guys remember, maybe 2 months or a month and a half ago, I've talked about the prices. And yes, the inflation is coming down. It's at 2.4% here in Australia, and it's at 2.8% in UK. We just got the release yesterday from CPI over here from the month of February. We got the consensus was 3%, and it came in to be 2.8%. So 0.2% below the expected, but not sufficient to be into the territory of controlled inflation, what the central bank likes to call the target inflation, okay? And the target rate, of course, they have both of those. But there's a lot to be done still, because the GDP hasn't, grow as same in Australia. We did had a incentive from the, I would say it's not an incentive for the population, it's more an incentive for the population to keep voting on the same politics here in Australia. So anyways, not getting into politics, but this week we had a tax cut. Well, that's not going to help much the Australians, because that will only change $5 per week. So you can't even buy a coffee. I went downstairs today to buy a coffee. That was cost me $5.90. So I don't think that will help much, okay? I don't think $5 more into my pay, into a weekly base, will help me. But that's what they say. We've lowered the taxes. We've been doing great things for the population. But what they forget is that we still have the rates higher and we still have prices surging. So if I go to the supermarket, a liter of milk, it's going to cost me $4. So I don't think that's good. A bread, $5. So that's $10, pretty much $10 already into 2 really standard things that everyone eats on a daily basis, okay? So what I think it can possibly happen to Australia economy or even UK economy, as we had the inflation coming down, we saw the pound and the euro pound as well, and any other related currencies that had the pound currency sort of depreciated for a few hours, but then coming back to normality afterwards. I guess most likely what we will continue to see in the end of this year is some good projections for Australian dollar. As I say yesterday, the Bank of America and the BOFA had a prediction to end up the year end of 2025, to be Aussie dollar, Australian dollar against the US dollar at 0.68. We are trading around 0.63, 0.62, 500 this week. So we still have another 500 pips to be, maybe have a long position. I'm not talking that we have to long now and wait until the end of the year. No, I'm just saying that we can favorable the long positions on the Australian dollar. The reason here is most likely all of the money that were into US, as I say previously, it's flowing out from US and going to Europe and going into Oceania and China, Japan, New Zealand, Australia. And this money is flowing to those countries will strengthen the currency. Okay, so Australian dollar, Chinese yuan. So just today we had the Chinese market opening much higher than what was expected on the opener. And that push it up, the Australian dollar as well, the New Zealand dollar as well. So we are seeing some sort of effort around the players on the market to push these economies up. I do believe that in the second quarter of this year, so just next week, we're going to be having a strong Australian dollar, a strong New Zealand dollar, but I continue to be weak on the US dollar. Okay, maybe we can have a retracement on euro dollar, but then a continuation down, because this move up on euro dollar was pretty much driven by the German 500 billion euros stimulus that now it's priced in, and then we have the FOMC, the Fed, as well as the tariffs, but now it's sort of priced in as well with the news that we had over the weekend that I've talked about yesterday on my webinar and on Tuesday as well. If you haven't watched the video, you could probably click somewhere around here and watch that video where Bloomberg and Wall Street released a news saying that the tariffs won't be bad as expected. But, it will be the exactly same thing. So when the market sort of understand that, then it's going to have a problem, and that's where I think that the turn point will happen. Guys, I hope I helped you. I don't have much time today as always, so for these reasons we have the webinar. So from 5 to 6 p.m. I will be live, so bring your questions to me and join me on the Telegram to receive the link today. Thank you so much. If you have any questions, put down in the comments, or we'll make some time to answer those. And don't forget to subscribe, thumbs up. Thank you so much. I'll see you tonight, or I'll see you in the next video.